Hi, this is Zak Mir with the Bulletin Board Heroes here on Vox Markets, or here at Vox Markets for Thursday, the 6th of May. Starting off with Clear Leisure, where it looks as though we've got this broadening triangle formation, so that's normally a pretty bullish sign anyway, but otherwise we're just about to break that line of resistance there from March. That was around the 3.1 pence level, so an end of day close above that line today or tomorrow on a weekly close basis perhaps could take the shares up to as high as 7 pence as soon as the end of next month. At this stage, only well below the 50-day line, 2.5 pence, really delaying the upside scenario. You can see also we've got an MACD buy cross in the oscillator window there as well, so that's looking quite healthy at the moment for Clear Leisure. On to the first of our esports plays today. We've got Gfinity, where the shares have been delivering this sort of slow build, breaking that April peak at 5.17 pence, and while we're above that, we're looking towards the top of a rising trend channel, one that's been around for quite a long time, back in July last year, and that's promising us a target as high as 7 pence as soon as at the end of next month, only really well below 5 pence, maybe on an end of day or weekly close basis, really delaying the upside scenario there for Gfinity. Obviously, we had that full storm at the end of January for the shares. On to Gild, which I have to say I was thinking might take rather longer to have got its act together, but the reason for the relative enthusiasm and surprise today is the gap to the upside. As I've said, and as we normally point out here, gaps through resistance tend to be very strong trend building events, and the gap today through 7 pence, very, very impressive indeed. The initial target here up to 8.25, which is the top of that rising trend channel from November, and that's valid while we hold above the floor of the gap at 6.8 pence. Early and end of day close back below that, really delaying the 8.25 pence target. In fact, we should be looking for much more with this because of the gap that we've seen today. So if you're a fan of the shares, perhaps a 2 to 3 months target here would be the upper parallel of the channel, as high as 11 pence, maybe for July's time, something like that. Only back below the April resistance 6.3, really delaying or questioning the breakout or break higher argument for Gild Esports. So a bit of relief there. Moving along to a stock which has been somewhat difficult in the past, and here we've got Hurricane Energy. Some glimmers of hope here. The positive, I suppose, is the way that you can draw a line of support from September last year through the latest low, so that could be something which holds around 0.7 pence, the low yesterday. So while there's no end-of-day close back below that, we've got a potential for a rebound. We've also got potential for a rebound with the ultra-low RSI around the 20 level. Normally 30 is the oversold level, so let's see if there's going to be some kind of retracement, even if it's only back towards 1.4 pence, which was the initial high of May, but certainly not for widows and orphans on that situation. Stock's been a beaster all the way along in the near term. On to Harvest Minerals, and here a bit of a volatile situation, but we do have a line of support at the floor of the October trend channel there, around 2.8 pence. While we're above that, looking towards the top of the channel as high as 4.5 pence. Obviously, if you're cautious, which you probably would be, you would want to see at least an end-of-day close above the initial April, rather May resistance at 3.2 pence, before assuming this stock will have some traction towards the upside. Moving along to a stock which has just been requested in the last few minutes, just managed to get in before the door closed with Omega Diagnostics. Here we've been waiting for weeks and months for the shares to push back above the £1 level. We've got a rising trend channel here from the end of October. That's pointing to £1.20, which is obviously, as you can see from the chart, the main resistance on the daily chart there. Nice rebound today off the 200-day moving average, and minor bear traps below that 200-day line at 72 pence suggests that we are actually looking at the floor for the shares, and above, at least while we're above that last swing low there for the shares at 65 pence, potential for a move towards the April resistance in the low 90s. So chance of salvation in the near term for Omega at the moment. In fact, I'm probably underplaying the optimism on that. I think it's that rising trend channel does look relatively solid, so let's see how that goes. On to Predator, which has been one of the say surprise wins of the recent past, but a decent win. We've got a broadening triangle here, floor of the triangle at the 50-day moving average at 12.6 or 12.7 pence, and while we're above the 50-day line, looking towards the top of the broadening triangle at 30 pence, perhaps by the end of July. The big plus here really is the broadening triangle formation that tends to be evident in the more bullish of situations, which Predator currently seems to be. Moving along to a stock which I don't normally look at, but got a bit of a bonus today. We've had a horrible ride here since December for pure gold mining. What's interesting at the moment is not only the break of this falling wedge from March, so breaking basically the 72 pence level at that line, but also the way that with this lower low that we've had for the latter part of April, around the 70 pence level, then we've got bullish divergence, so rather higher RSI trace. So that bullish divergence could and should be enough to give us a move towards the 50-day moving average up there at 92 pence, and hopefully by the end of this month, obviously back below 17, we'd be questioning the recovery argument. Best case scenario target at the moment over the next couple of months up to £1.20 at that 200-day moving average. Moving along to a stock which is looking rather better than it has for quite some time. Protium Sciences. Here we've here it's key that we hold above that March resistance there at 6.5 pence. While we're above that, looking towards 9 pence and the top of the rising trend channel from basically this time last year, and that could be seen by the end of next month. Moving on to Red Rock Resources, which I haven't looked at for probably a month or two now. We'll see whether there's any improvement here. Nice bear trap from below the 200-day moving average at 0.87 and bouncing off that line of support from March last year. Want to see, I suppose, a break of the 50-day moving average around 0.95. We can get a weekly close above that. The shares could be on their way towards a 2 pence target over the next 2 to 3 months, but obviously it is early stages, or it's early doors at this time. Finishing off with just 3 to go now. One is UK Oil and Gas, and here we've got a situation where the shares have tried to find new support at old resistance around the 0.23 level. We've basically done that, but probably want to see an end-of-day close back above that 0.27 level, the late April resistance for the shares. If we get that over the next few days, then we've got a possibility of rising back into the 0.35 plus area, which we had at the beginning of last month. Staying with the oil and gas area, and it's Union Jack Oil next, and here a bit of a punter's favourite over the recent past. Current situation is it looks like we've got a good building process here between 35 and 40 pence. Obviously one could wait for 40 pence to break. If it does on an end of day close basis or a weekly close basis tomorrow, then we're looking at the top of that rising trend channel from October as high as 55 pence by the end of June. Finishing off with another stock which has gapped through resistance. In this case it's Zambeef Products, and beautiful gap there through 7 pence. Low of the day is currently at 7 pence, so while we hold above 7 pence on an end of day close, looking towards the top of the rising trend channel from the end of July last year as high as 9.5 pence by the end of next month, or perhaps even sooner. Early back below the floor of the gap around 6.5 pence, really delaying the upside scenario for Zambeef. That's it from me today. More updates tomorrow.